Hey. Good morning, everyone. This is Financial Literacy One-on-One, and today we'll be talking about CIT Group, not Citigroup. This is a different bank than Citigroup, but nonetheless, they're being merged with one of the largest banks in the world, First Citizens Bank, and they're going to have over $1 trillion in assets. I believe that this could be an absolutely great stock to add to your portfolio. If you got airlines, you got oil and commodities and, gold and bonds, this will be another good stock to put in your portfolio. Okay. So let's get right into the stock review here. Now we're looking at my portfolio. Today I went out and I bought me a option with them long term. Let me see if I can find my history for you guys. A lot of news that came out over the weekend. Let me scroll through this. All right, let me get right into it. We're going to look at their performance. Now, ever since the merger, the performance has went out of the roof, okay? Out of the roof. Today, they're already up close to 4%. Now, let's look over the past 5 years. Now, supposedly, I thought they were doing a lot better than they were doing before, just because they were closely related to Citigroup, but not in a sense of assets or business, but just in the name. But I think they was only being sold around like $2.2 billion. Nonetheless, though, over the past 5 years, been around 36%. Okay, down, unfortunately. The past year, they've also been down around 42%. The last 3 months, they've been up 38% because a lot of information, a lot of news has been coming out about this huge merger, and we're going to get into that. The past month is around 51%. As you can tell on their time chart here, how they're ticking up ever since that information has come out over the day. They've just been rocketing up. So there's a lot of money to be made with this particular stock. The past week, they've been up 29%. And then today, as I said before, they're close to 4%. Okay. So that's really, really good for your portfolio. And look at today's price. It's only around close to $26. Let's say it's $26 a share. And again, for myself, I bought an option. Right here, you can tell I bought this early this morning before the markets actually went live that way. But this is a long-term option, okay? This doesn't end until April 16th. And the reason why I bought this option so far out, because if you guys have been looking at me for a while, I buy a lot of risky options and they really pan out pretty well. I do make a lot of profit off risky options, but there is risk. I've actually lost a lot as well. But when I balance it out, I've been doing better than I was not doing. But when this one, I have to take in, we're so close to the elections of November 3rd. I have to wait until the market begins to balance itself. But again, this merger is going to happen, I believe, prior to the election, or it's going to happen before the year is out. Okay. If none of you are familiar with CIT Group, then I'll read just a little bit about it so you guys become familiar with it. It is a financial holding company which provides financing, leasing, and advisory services. It operates through the following business segments: commercial banking, consumer banking, and corporate. The commercial banking segment consists of 4 divisions: commercial finance, real and real estate finance, and business capital. It provides a range of lending, leasing, and deposit products as well as ancillary products and services, including factory cash management and advisory service, primarily to small and medium-sized companies, as well as to the rail industry, okay? Basically, a bank that does a lot of stuff, okay? We're not going to get too bogged down with that particular information. They roughly have 3,600 employees. The dividends around 5.20. I know a lot of you guys still loving dividends, but nonetheless, that's probably around, at a stock price around $26. But when they first did it, I want to say around 30-something cents, okay? 30-something cents for their dividends. And we'll get into that as well on Market Watch. Related list, they're in banking, New York top movers, and upcoming earnings, okay? We're looking futuristically. Here are the headline news, which is very, very important for you guys to understand. Regional lender First Citizens to buy CIT in a $2.2 billion deal. And a $2.2 billion deal, okay? So this is really huge news because this is like the first time in a long time that two large banks joined together. They're going to be one of the largest banks in the world, okay? All right, buy 40%, hold 60%, 0% sell. Again, this morning I went in, I bought a large option that's not going to expire until April 16, which is going to give me a lot of wiggle room, okay, for pullback date, market correction date, because it really doesn't matter at this point with my portfolio who wins or who loses. I believe around the era, as we get maybe a week or two out from the national elections, I believe that we're going to see a market pullback, because when information is rolling out and investors know that Donald Trump is for the stock market, if he's leading in the polls, then look for the stock market to do well. If Joe Biden is leading in the polls, then look for the market to pull back some, okay, until things balance back out. Now, I keep telling people that politics, news, there's a lot of entities, okay, and also Mensa and mega investors play a pivotal role in the stock market. Take, for instance, if a Warren Buffett sells all of his Coca-Cola stock, that's going to drive the market down, the entire market, because he don't just have hundreds of stocks or thousands of stocks. Usually when Warren Buffett buys into a stock, he buys millions of stocks. So it drives the market down, especially when they're listed on one of the three stock exchanges, okay? So we have to understand how people, news, and politics all drive the market either up or down, okay? All right, here we go. So we have the earnings. They were up. They went down in Q2 just like anybody else did. Now they're back up, especially with that great news, okay? People in this space also bought Wells Fargo, Bank of America, Citigroup, and Carnival, okay? And Carnival. Let's go over to Market Watch, and let's look at these dividends and hard numbers, okay? Dividends and hard numbers. And also let's look at their past performance, which I think is really, really important for you guys' portfolio. All right. So the 52-week range is $12 to $49. Are we looking at this right here, ladies and gentlemen? $12 to $49 roughly, okay? So if you guys was anywhere in the middle, you probably made a good deal of money. But nonetheless, their past 5-day, 1 month, and 3 month has all been up. And of course, a year to date and a year back, they've been down. But nonetheless, this great news about the merger with First Citizens Bank has driven this stock up, I want to say around what? Anywhere from 25 to 29%, okay? All right, their dividends. Now, they're a company that's operating heavily out of debt. And that's probably the reason why they're selling their bank. They're operating heavily out of debt. Earnings per share is a negative $5.28. And I'm also going to show you a little bit of First Citizens who is actually buying them. And I want you to compare and contrast how both banks are doing so you understand. Now, this bank is in everyone's price range, but First Citizens, you might want to do fractional investing, but most people are not going to buy a share. I already know that. Now, the dividends, as I said, 35 cents per share. Not really much to consider there. First Citizens and CIT Group announces this year's first big bank merger, okay, which is, again, headline news. Now, let's go over to First Citizens Bank. This is what they've done in the past 5 years, okay? They've been up 85%. In the past year, they've been down 14%. The past 3 months, they've been up 7%. The past month, they've been up roughly 24%. The past week, 17%. And then today, they're up 5.5 points. Okay, absolutely great. They're still moving along. I'm not going to read too much about First Citizens Bank because, again, we understand what banks do. They deal all across the world in different sectors, real estate, business, funding, loans, you name it. Okay. So they also have dividends at a lower price margin at 0.41%. Their related collectibles are in banking and they're headquartered out of North Carolina. Okay, they got the same headline news as CIT Group Bank. And of course, Q1, they were down. Q2, they're up. Q3, they're slightly down, but I believe with the on-take and merger of CIT Group, they're going to rise back up. And again, you got JP Morgan, Bank of America, and GE, and CIT Group, the actual one that actually merging with, but they're buying. When people say merger, they're taking that business, combining this business, but we bought you out essentially, okay? Now, when it comes to their profit and their dividends and trying to figure out if they're a company that's operating out of debt or not, they're a company that's operating out of great profit, okay? So the past 52-week range has been $276 to $542. And as you can tell, in the past month and 5 days, they've been up tremendously. If you average these out, it's both up over 20%. A lot of times when people are looking at how they've been profiting over the course of time, you have to do an average, right? The 3 month, the 1 month, and 5 day. I'm just taking the average of the 1 month and 5 day to let me know they've been up over 20% in the past month, okay? If you average the 3 months in there, that's going to go down to probably like 12, 13, 14%. But nonetheless, you're still over that 10% threshold, okay? Now, let's look at the EPS. This is remarkable. This bank is absolutely killing it. I haven't seen a great EPS like this in a very, very long time. And their dividends are, as you can tell here, is 40 cents. Okay, 40 cents. Let's go a little bit into CIT Group. Of course, they're financial holding and they're being bought out again by First Citizens Bank. I kind of want to go over their max here to show you the volatility in the stock. If you guys can see that, they have a lot of volatility over the years. And a lot of times what I believe that I think they went wrong at, because a lot of banks try to be like moral and ethically correct. So they give out a lot of dividends that can actually hurt their profit margins. If they're hurting a profit margin because they're giving all of their clients a lot of money back in dividends, and also they're doing bad investments or bad loans, that can absolutely hurt a bank. Now, this bank is headquartered out of New York nonetheless, but no bank is going to merge with another bank if they're not hurting, okay? They're absolutely hurting. They're only selling their bank at $2.2 billion, okay? Let's get into some of the important news here because I think it's relevant to the topic of you guys actually investing inside this particular stock, okay? They want us to subscribe, and we're absolutely not. We're absolutely not going to subscribe. Let's go over to, let me see if I can find me another story here. That's out of Barron's. Let's see if we can find a story without subscribing. Okay. As you can tell that First Citizens Bank went up 5.29%, and then CIT Bank went up to 4.3%. They said Friday they have agreed to an all-stock merger of equals that will create the 19th biggest bank in the U.S. by assets. Under the terms of the agreement, CIT shareholders will receive 0.062 shares of First Citizen stock for each share owned. So listen, that is what the really important part about this stock is. We understand if we go back here, look how much First Citizens Bank is per share. $414 per share. Very, very imperative, okay? Very, very imperative. Now, when you go back over, because of the price margin that CIT Bank is only $26 a share. So they say here, under the terms of agreement, CIT shareholders, okay? So if you go over and you buy shares at $26 before it really balloons up, you will receive 0.0620 shares of First Citizen stock for each shared owned. First Citizen shareholders will own 61% of the combined entity, with CIT shareholders owning the remaining 39%. Okay, then it tells you about the transaction that brings together the complementary strength of First Citizen and low-cost retail deposits, blah, blah, blah. Then it gets into the new bank where it'll have more than 100 billion in assets and more than 80 billion in deposits. The banks are expecting to boost EPS. Okay, think about this. Earnings per share, I've been teaching this for a very, very long time, to boost EPS by 50% once cost saving have been completed. The deal is expected to close in first half of 2021. Let me go back because I really want to drive home that narrative, okay? The EPS. Now, when we come to CIT, look at their EPS right here, earnings per share, and they were still paying their clients 35 cents. Look at this right here, 35 cents a share. No company should ever pay their clients any dividend, not even a penny of dividends, when you are operating out of debt. When you are operating out of debt, you see this negative sign here? When you are operating out of debt. Now, if we go back to First Citizens, let's see, look at their EPS, a positive $41. They're killing it. So they can afford to pay their patrons, they can pay their clients 40 cents a share. Let me tell you right now, they can probably pay their clients $1.40 a share. Would just be absolutely phenomenal. But nonetheless, they're paying this. Now, if you get into the stock right now, if you guys are just huge into dividends, then they're paying out their dividends right here at September 11, 2020. Okay, that's why I just love Market Watch. It gives you the dollar amount and also the dividend pay date, which is absolutely great for you guys. Okay. Let's see who we have in the chat today. Let me check you guys out. Let me see who joined me this morning. We have Afonso Morris. He says, would that be a good put option trade? No, I have a call option. I have a call option on this for April 16th. And I'll go back and let you guys see my portfolio. Give me 1 second. Let me get some things popping real quick. Let me look at this really quickly. I bought it this morning. I have to make sure that the actual option took place, okay? Let me just make sure that this option took place. Give me 1 second, guys. Give me 1 second. We're going to look at this and see if it took place and see if I can make any profit off of this early this morning. Let me look at this. I'll let you guys see what I'm looking at really quickly. Looks like my portfolio is down. I don't see my option that I bought this morning. My buying power is only 30, so it must be at a limited price order. Let me look down here. Where am I? Where is my history at? I'm looking for that option. Okay, I don't see where I bought that option. So let me look at CIT Group. It might be listed and hasn't populated yet on Robinhood. We know how Robinhood can be. So right here it said that I placed my option at $2.70. It says place, limited buy, open, good for the day. Okay, cool. So that basically means that it better not go over my limit price of $2.70 per share within my option contract. So hopefully this execute sooner than later, but I believe it won't execute because I bought it at a $25 call. And look, ladies and gentlemen, it's already at 26. That's money that I could have made already, but I'm just going to hold it and see if anything actually happens in the market. But let me let you look at my portfolio so we can see whatever I have in here that you guys can actually look at to see if you want to invest in it as well. Okay, I have the go-go option. This expires November 20th, and I'm up $60 at 29.27%. So that's doing pretty good. You know my rule. I love anything over 20% when it comes to any stock or any option. 20% is absolutely phenomenal, and I get mad at myself because guess what? I only have one contract. I wish I had, at least 10 contracts nonetheless. Let's look at my portfolio a little bit more to see if you guys can see anything that you may want to invest in. Let me see here where I'm up. Okay, Sunrun, I'm up 2.79%. Let's look at that one. Okay, Sunrun is up at $64 a share. Look at this, ladies and gentlemen. I am up 74% on Sunrun alone and my profit is $385. $385, and I only have 14 shares. Okay, Sunrun is a solar panel company. Okay, they install solar panels and things of that nature. But nonetheless, they're doing absolutely phenomenal, and they're up 74%. And here's another thing, what I love that you guys need to consider inside your portfolio. When you have, let's take for instance, you have a stock at 74%. I'm gonna go back. Keep 74% in your minds, because I'm trying to drive a point home here. 74%. Okay. And then I have, nope, that's not a good example, because that's still doing pretty well at 20%. I'm trying to find a stock that's down. Okay. Let's see. Workhorse is up. Let's look at what's really down. Let me see what's really down. Let's look at this one. So 74%. Okay. Here we go. 74%. If I take that 74% and I take away that negative 30%, then depending on the price point and the margins of the stock price and the amount of profit, okay, then it kind of essentially equal itself out, not to the point of zero, but to the point where if I take 74% minus 31%, then I'm at what, 30, let me see, 74. I'm a little roughly over 30%, but then again, look how much I'm down. Then you have to do the hard number count of adding and subtract that amount, and then I'm still down when I compare those two stocks. So that's why it's important when you build a very diverse portfolio to compute your percentages and also your hard numbers and see at the end of the day, okay, at the end of the day, are you in profit or are you in debt when it comes to your portfolio? And if you're in debt, do not sell any of your stocks, okay? If your total portfolio is in debt, do not sell any of your stocks. And what I like about any investment platform, okay, just to kind of give you guys some insight here. What I like about any investment platform is that when you go back, you can see your weekly earnings, okay? So it's saying because all the fluctuation in the market, as you can tell, a lot of my dives here, I'm absolutely down. Then what it shows you here is I've only made in the past week around $242. And if I go all through the month, I've only made $1,400 for the month. That's not really good considering in the past how I've been done. But again, since COVID, the market has been very, very, I would say unpredictable in the sense that it's been doing really well since then that point, okay? The stock market was blowing it out the water until COVID-19 hit. So right now, you just got to stay in it for the long haul. Do not become an emotional investor, okay? Do not become an emotional investor and sell any of your securities right now, okay? Any of your securities right now, I wouldn't do any of that. And I'm putting it up. If you guys have any questions, there's a link in the chat room that you guys can join me here with or without your video so we can have a discussion. If you have any questions that you might want to say about an option or a regular stock trade or any commodities that you might want to think of, if you have any questions, this is the time before I get off really quickly, ladies and gentlemen. But nonetheless, we're looking at my portfolio here and my past month performance. And as you can tell, in my opinion, I have not been doing well in the past month. I really love to see 20%, okay? Some people look that you're in the positive, that you're over 10%, but we understand that inflation has been fluctuating. Now it's going to hit around 3%, okay? Especially when we come out with a vaccine, look for inflation to go up. I believe we have a caller. Let's see here. Hey, what's going on? You're live.
Hey, how you doing?
I'm doing well. How you doing, Alfonso?
Oh, I'm doing good.
Tell me what's on your mind, brother.
I'm a big fan of your channel.
Thank you. I appreciate that.
Yeah, I was going to also speak on that. I had bought Neo when it was at like $11, and
okay.
When Neo had sold, he maybe had sold like 40 million shares at $17.
Okay.
And it went on. It was at $20 at that time, and then it went all the way down to maybe about 16 or 7. I panicked and sold like 95% of my shares. So when
did you do that?
this was maybe like this was the weekend. This was the Monday before. I want to say, who was that? That had to be maybe Septemberish, like
Okay.
August, September. It was whatever holiday is there, that the Monday before
So
that
you
holiday.
you bought Neo at $11 and you sold Neo at what dollar price?
At about $17.
Okay. So did you sell
Yeah,
all of your socks? All
just
of your
about. I
socks.
mean,
All of your socks.
yeah, just about. And then like I said, it ended up going right back up to like $19-20 that Monday. I mean that
Okay.
like that next week. You know what I'm saying? So I was like, dang. So like you said, you can't be an emotional trader. But I
No.
was trying to understand. Okay, I had bought into DraftKings. I also tried to buy into the workforce, into the um um uh concert
Come on, bro. Oh, he dropped out, ladies and gentlemen. That means he probably had some technical difficulties. But what the brother was saying is that he bought Neo at $11 a share and sold it at $17 a share. And at the time, he was an emotional investor. Okay. And we understand right now, Neo is up almost close to $28. And matter of fact, if I go over the past month, okay. Okay, he's back. Give me a second, brother. Give me a second. Let me finish my thought here. Um, he was talking about now the past month, as you can tell, Neo has been up all the way close to $29 a share. So there's a lot of money. There's a lot of money that he actually lost. Let me share this with these guys. So as we look at Neo, again, he bought it at $11 a share. He sold it at $17 a share. And in the past month, Neo was close to $29. Now today, Neo is still up. Let me show you today's. They're up at 27.72. Now, there's a little bit market correction going on right now, but nonetheless, I want you to look at my portfolio of Neo. Okay, I'm at 50%, and I've made close to $1,200. But that's not the full extent of my portfolio when it comes to Neo. I want to get into the history. Let me see the history. Now, as you can tell, I did a lot of contracts here, and they're not showing my full history, but I showed a lot of people how I made $4,000 off of Neo in a very, very quick time. What's your final thoughts, Alfonso?
Oh no, I just was trying to understand, because I know you had mentioned that that sometimes the stock can be value, because I was understanding I might have to just start getting books and reading more. Okay, like I bought in the DraftKings, like how DraftKings different than they're doing record numbers, but the stock is fall.
Okay.
Like I was trying to understand like how, like how a stock can, like, is okay. Like I was trying to say, like, would it be more beneficial to buy into an option? Because the thing about it with a trade option, like, how you might buy into a trade option and the stock is doing well and it's still doing like record numbers as far as like it's as far as the numbers coming in, but then the stock just goes down. I don't know,
Okay.
like, I was trying to understand, get some understanding on that.
Oh, so it depends on when you buy the option and what type of option. I know you said in the chat you were talking about a put option, really
Hmm.
banking on the stock that is going to go down because of the merger. But if we go back to Citigroup, not Citigroup, that's my arch nemesis, but CIT Group, because of that news of the merger, it's went up. So again, and then they are also predicting that once they actually merge, that their EPS is going to go up 50%. So that's to tell you that it's going to be a very bullish stock. So automatically, what I did, I went and I placed me an option at $25 call. I don't think this option will be executed because of the price margin at the limited price. That means I would have been up, man. I would have been up already about $200-300 based upon that option. Now this option is set for April 16th, so it was a more pricier option because the more long term your option is, the more expensive it's going to be because it has the opportunity to grow and to fall, and you can always catch it on the growth. So when it's on the growth, and I see a stock is going $300, $400, $500 in profit, I can sell that option and reap the benefits. But if I do a riskier option, I don't have that much wiggle room. If there's a market correction date and I bought it at a low price, or I bought it at a high price point, I don't have the fluctuation in the market to actually benefit from it. So it's a more riskier option. Okay. So it's essentially like I bought one in the past week. One, I made $400. The other one, I lost $200. So my only profit was $200 because they were both risky options. So the more time that a stock has to wiggle back and forth, the better chances you have of making a great profit. Okay. So I see the brother dropped off again. Let's see if anybody else is in the chat. Give me a second, ladies and gentlemen. Let me see if anybody else is saying anything. Give me 1 second. If anybody else have any other questions or statements they'd like to make or any advice, please do so by the link in the chat room. By the link in the chat room. If not, I'll be on a little bit later. I'm gonna give you some information if you guys do not know about black banks. Okay, I'm gonna list about 21 black banks. I found a really good source that I want you guys to look at because I know a lot of you guys want to support foundational Black Americans and black banks, and I'm gonna give you those banks so you can support. Maybe some of those is actually in your state and also in your area. That way you can support your own. Okay. Alfonso says the app not mixing with my phone. I understand, brother. I have other issues with that, but Restream supposedly trying to fix that. But nonetheless, ladies and gentlemen, that's my time for today. This is Financial Literacy 101. Learn money and be inspired. You guys have a great morning. See you in a little bit. I'm out.